That is a big tax saving and something the government are looking to push. So I think you should seriously consider that. Now, once you have a limited company, how do you take money out? So you can take a salary, and most people tend to take a very low salary, so they pay no income tax and they pay no national insurance, which is fine. Above and beyond that, they then take dividends, the first 2,000 being tax-free, and then whatever else that they need, they take out. But there are other things that you should be thinking about in terms of profit extraction from a company, which some people don't always take advantage of. And the first one, which is pretty well known but not that well used, is pensions. So if you take money out of a company to make pension contributions, that's adding to your personal wealth, and you get a tax deduction from the company. So that's something you should seriously consider. If you have a mobile phone that you use in your company, you can have that as a deduction. If the company loans you money, especially if it's less than £10,000, that can be an advantage, but you need to consider loans to participators and make sure you don't fall foul of those rules. Then there are other benefits like cycling to work, having a canteen, eye tests which are available. Again, small little sums, but they all add up in terms of taking money out from your company. Another big one right now, which I think a lot of people should be seriously considering, is if you have a limited company, think about having an electric car, because there's no company car tax this year if you have a fully electric car through your company. Next year that increases to 1%. The year after it increases to 2%. So that is a big tax saving and something the government are looking to push. So I think you should seriously consider that. Something else which again is very prevalent, company owners loan money to their limited company. Not all of them charge interest. Well, if you plan your remuneration carefully, you can charge interest, and a good amount, by the way, without having to pay any personal tax on that. So that's something you should be thinking about and seeing how you can plan your remuneration. Now, of course, it depends on how much money you need personally, but if you don't need that much money, you can take out best part of 20,500 tax-free by just using the different allowances, especially if you've loaned money to your company. Now, of course, if that has happened and you're charging interest, the company will have to file a CT61 return, either quarterly or annually, especially if it's a loan longer than 12 months.